While discussing cash basis accounting, I've told you that cash basis accounting is a system of accounting wherein transactions are recorded as and when the cash out cash inflows or out. So depending upon the inflow and outflow of cash, transactions are recorded. And under the system, transaction which does not deal with the inflow outflow of cash, like the credit transaction, are not recorded. Then it's restricted. So while discussing this, I've told you that revenue under the cash basis accounting is recognized only when cash is received, whereas the expenses are recorded as and when the payment are made. And profit and loss, just a second. Difference between the total revenue and total expense is considered as the profit of the business or the loss for the business. Then we have understood that there are certain transactions that need not to be recorded while doing the cash basis accounting, like cash basis accounting does not deals with the outstanding expenses, prepaid expenses, accrued income. There is no concept regarding the outstanding prepaid and accrued and advance income. Then we talked about the advantages and the limitations. Similarly, we also did accrual basis accounting, wherein I told you that both the transactions are recorded, the cash transaction as well as the credit transaction. Okay, and then so all of these are already understood. Then we also understood the difference between the cash and accrual basis accounting. I've already explained these things to you. I'm sure that everything is clear. So now we'll discuss a question based on the accrual and cash basis and accrual basis accounting. I don't have many questions based on it. I'll be doing just one question, and that question will be solved both on the basis of the accrual and cash basis accounting. All right. I don't have any other question available as of now, so we'll just be able to discuss only one question. That will clear the concept of the chapter. All right. And talking about the exam, you won't be most of the time. Questions from the chapter are theoretical, not numericals. Numerical is hardly asked from the chapter, and if there will be some numerical question put up from this chapter, you will easily be able to solve those questions. So let's do a question that will give you some idea how do we do the basically how to solve questions based on the chapter. So for that, I'll start with this question. Question. It says during the financial year 2020-21, Mohan had cash sales rupees 90,000 and credit sale of 60,000. His expenses for the year were 70,000, out of which 30,000 is still to be paid. Find out Mohan's income for the year 2020-21 following the cash basis account. All right. So all of you, just do one thing. Please write down the question in your notebook. Mostly we take the screenshot, but because there is going to be only one question that we'll be discussing from the chapter, so I want you to note this down. This is a small question, and on the basis of this only, we'll be able to understand the cash and accrual basis account. Please note it down. Got it, everyone? Labiba, Vanisha, and Ritika, all of you are writing this?
Yes, sir.
Yes, sir.
Okay, do it quickly.
Yes, sir.
Done, everybody? Done, everyone?
Yes, sir.
Ritika, you are still writing it? Labiba? Ritika?
No, sir, done.
So we're done.
Finish it quickly. So let me solve this question for you. So see, even though a question is asking us to yeah, find out Mohan's income for the year 2021 following the cash basis accounting, right? But we'll do this question from both the approaches. Okay. First of all, let's try solving it with the first approach, the cash basis accounting. Just a second. Cash basis accounting. So if we are solving it, this question, if we want to determine the question on the basis of cash basis accounting approach, in that case, we'll just consider all the cash related transactions. All right. So first of all, first thing given the question is cash sales. All right. So we'll be considering the cash sales. Which is given in the question is 90,000. Then we have credit sale. Obviously, credit sale is cannot be considered by cash basis accounting. So we'll just ignore this. His expenses for the year were 70,000. So this is the 70,000 expense that I'm assuming that it must have been paid by way of cash. It says out of which 30,000 is still to be paid. All right. So 30,000 is still to be paid. So that means the total expense actually amounts to 40,000, right? Expense. We'll just consider the expenses that has been paid during this year, not the entire amount of expense. So total expense paid will be 70,000 was the total expense, out of which 30,000 is still to be paid. That means only 40,000 has been paid. Right? Then, all right, so this is it. We got the total receipts and the expense. So the total income will be, or you can also call it profit, total profit. $90 minus 40,000, 50,000 will be considered as the profit of Mr. Mohan. Understood? Is this clear, everybody?
Yes, sir.
But if we follow the accrual basis accounting, you'll notice that the profit in that case will differ. If we follow the accrual basis account, you guys are noting this, writing this down, huh? Ritika, Vanisha, Labiba.
Yes, sir.
Done with the first one, cash basis
Yes,
accounting.
sir.
Yes, sir.
Okay, now what will be the amount of profit if we follow the accrual basis accounting? So first of all, while doing the accrual basis accounting, we will take all kind of sales, total sales, including the cash sales as well as the credit sale. The cash sales given in the question is 90,000. Credit sale is also there, 60,000. So total sales equals to 1,50,000. And similarly, we will take the value of the total expenses. Total expenses. Expenses which has been paid, expenses paid plus expenses which are outstanding will also be taken into consideration to determine the profit. So outstanding expenses. Outstanding expense. This was 40,000 and remaining must be outstanding 30,000. So total expenses amount to 70,000. Now you will see the difference in the profit as well. The profit this time will be 150 minus 70. So it is 80,000. Right? Earlier it was 50,000. Now this time we have the higher profit because we also considered the credit sale. We just did not we just not gave consideration to the cash sales, but we also took the credit sale into consideration. Therefore, our total profit rises from 50,000 to 80,000 in the accrual basis accounting. Correct? And yeah, this is not necessarily, it does not mean that every time the accrual basis accounting will be giving you the higher amount of profit. I'm not trying to say that. I'm just saying that this time we have a higher profit by the accrual basis accounting approach, but it does not mean that it will always happen like this. All right? Understood, everyone? Is this clear, everybody?
Yes, sir.
So this is it. I don't have any other question right now that I can give you to try. But yeah, let's do few questions, few MCQs based on the discussion that we did in this chapter, on the basis of which I'll be giving you few MCQs. You have to tell me the correct answer of the question. So the question number one, and Ritika will answer this. It says under cash basis accounting, expenses are recorded cash on payment, on being incurred, either on A or B or none of these. Ritika, tell me. Under cash basis accounting.
On payment.
On payment. Yeah, this is the right answer. So under cash basis accounting, expenses will be recorded. Expenses are recorded only on the payment. Next, under accrual basis of accounting, expenses are recorded. Tell me, Vanisha. While following the accrual basis accounting, expenses are recorded when? On payment, on being incurred, either A or B, or neither. None of these. Vanisha. Tell me quickly. Vanisha, are you there? All right. Anyway, so Labiba, could you please tell me the right answer of this question? Yeah. Okay.
Sir, am I audible now?
Yes, you are audible.
Sir, on being incurred.
On being incurred, okay. Labiba, what do you think? What do you think is the right answer for the question number 2? Not responding. Zainab, could you please tell me the right answer?
So
It is, sorry?
is it B?
Is it B? Okay. All right. So Zainab, could you please tell me what do you think in the accrual basis accounting expenses are recorded when?
Sir, on being incurred.
On being incurred, okay. What do you think, Ritika?
So on being incurred.
Okay. So I think in this case, everybody is wrong. Under the accrual basis accounting, transactions are recorded on being incurred or on the basis of payment, whichever is earlier. Tell me, is it the right answer? On payment, whether we should record the transaction on payment or on being incurred. Anybody want to reconsider it? All right, don't worry. You gave all of you gave the right answer. That is right. On accrual, under accrual basis accounting, expenses are recorded on being incurred. As and when it incurred, we have to record the transaction, irrespective of whether the payment has been made or not. Or not. Transaction will only be recorded on being incurred. Okay. Next question. Accrual basis of accounting, and Labiba will tell me the answer of this question only. Accrual basis of accounting. Option A does not give a true and fair view of the profit and financial position. Give a true and fair view of the profit and financial position, may or may not give, or none of these. Tell me, Labiba, quickly. Tell me, Labiba, the right answer for the third question. Yeah. Tell me.
Is it B?
Is it B? All right. Manisha, what do you think the right answer for this question?
So option B, it gives a true and fair view of profit and financial position.
Yes, yes, that is right. Option B is the correct answer for this question. It gives a true and fair view. Therefore, in most of the time, if we talk about the large organization, this basis of accounting is preferred over the cash basis accounting because it gives true and fair view of the financial position as well as it also provides you with the correct amount of profit. Okay. Next question: accrual basis of accounting recognizes. Tell me, Pratika.
So
Accrual
both
basis of
A
account.
and B.
Accrual basis recognizes both. Yeah, that is right answer. Both A and B. It also recognizes the outstanding and prepaid expenses and also recognizes accrued and income received in advance. However, in case of the cash basis accounting, these are not recognized. Last, under accrual basis of accounting, let me tell you this: both cash and credit transactions are recorded. Only cash transactions are recorded. Only credit transactions are recorded. Answer is, tell me, which kind of transaction are recorded in the accrual basis of accounting?
Both cash and credit transactions.
Yes, both cash and
Both
credit
cash and
transactions.
credit.
Yes, both cash and credit transactions are recorded. One last question: what are the two bases of accounting? This is obvious, very obvious: cash and accrual basis accounting. All right, so we have few questions as a true false as well. You need to identify whether these statements are correct or incorrect. The first statement: under cash basis of accounting, entries in the books of account are passed when the cash is received or paid. That is the right statement or false statement. True or false? Tell me. Any one of you. Yes, indeed. This is the true statement. Under cash basis accounting, entries are recorded in the books of account when the cash is received or cash is paid. Next, cash basis of accounting is incompatible with the matching principle. Is that so? Is it the right statement? It does not follow the matching principle. Cash basis accounting.
True, sir.
So true.
True. Yes. Next, accrual basis is more appropriate basis for determining the profit as an expense, as expenses are matched against revenue earned in relation thereto. Yeah, so this is also the true statement.
True.
Next, accrual basis of accounting gives a true and fair view of the result of the operation of the business and financial position. This is also true.
True.
One last statement: cash basis consider the revenue as realized when the goods are sold. Tell me. Cash basis consider the revenue as realized when the goods are sold. Is that correct?
False.
False. Cash basis consider the revenue when it is actually received, not when the goods are sold. So this is false. I hope this is clear, everybody.
Yes, sir.
All right, so this is it in the chapter. So this is all about the basis of accounting. I don't have any other question available as of now based on this chapter, so we won't be able to discuss any other thing. One last chapter is still there: provision, reserves, and provision and reserves. So just give me a second. Let me check if I have the PowerPoint for the chapter or not. Give me 2 minutes. All right, everybody. So I don't have the PowerPoint for this chapter. I think you will have to make note of this chapter. So kindly put the heading on your notebook. This is like the 16th chapter of our syllabus, the last chapter, provision and reserve. Okay, so all right, everybody. So first of all, we'll start with the provision, meaning of provision. Can any one of you tell me the meaning of the provision? You must have heard this term very frequently while covering the account. So anybody have any idea what are provisions? Nobody have any idea about the provisions? All right, so let me tell you, provisions are what? Provisions can be you can say it as a part of profit which has been kept aside and transferred to profit and loss account for the purpose of in order to meet some known liability, the amount for which cannot be determined with very accuracy. In such kind of liability, certain amount is set aside by the organization so that if such liability is incurred in future, we will have sufficient amount of money available to meet that contingency. I mean, meet that liability. So that kind of the amount that has been kept aside to meet the known liability amount for which is not certain is called the provision. Like for example, it could be let's suppose there are debtors having a value of 10,000, but we are doubtful that we will be able to recover the entire amount of debtors. We we are we have anticipated that there will be some 3,000 that we won't be able to realize from our debtors. All right, so this is a kind of loss that we will be suffering in future. So what happens in order to bear this loss, we sometimes prepare the provision on advance basis. So what do? We make a provision regarding the doubtful debtors by the name of provision for doubtful debts. All right. And similarly, we can also make the provision regarding the like let's suppose we anticipate that there could be some amount that we will have to pay in future by way of tax. let's suppose we anticipated that there will be 15,000 that we'll have to pay to the government by way of tax. So this is just an estimated value. Now, what do? We just prepare ourselves by keeping certain amount as a provision by the name of provision for tax. All right. So let's suppose we have generated certain amount of profit. So out of that profit, let's suppose we have generated a 50,000 profit. Out of that, I have kept aside like 3,000 for the doubtful debt. I have kept aside 15,000 for the payment of the tax. So this will be called provision for debtors, provision for doubtful debts. This will be considered as the provision for tax. And there could be other liabilities or expenses as well for which we can make a provision on advance basis. Like we anticipate that there could be some wear and tear with the machinery and which have to be repaired. All right, like for example, there is a machine which requires repairing, and we anticipate that if machine broke down, you will have to spend around let's suppose 4,000 on its repair. So what we can do, we can simply set aside around 4,000 for the repair purpose, which will be called provision for repairs. You understand that? What I'm trying to tell you, that provisions are part of profit which is kept aside in order to meet some future obligation, future liability or expense, amount of which is not certain. We are not sure about the loss or expense or liability that we will have to incur in future, but we are saving certain amount so that when such liability or expense or obligation arises, we will have sufficient amount of fund to pay off such obligation, to pay off such liability. All right. So this is what provision is. Let me just give you a brief explanation of the provision so that it will be easier for you to explain and write in the exams. Let's start with first of all the meaning of the provision. Provisions can be defined as what? Provision is an amount basically. Please note this down, everyone. Provision is an amount set aside right. So provision is an amount set aside in order to provide for a known liability. Liability is known, but the amount that we will have to pay is not certain. We are not sure about the liability, amount of which cannot be determined with accuracy. All right. Basically, it is charged in the profit and loss account on estimated basis. Keep that in mind. It is charged in profit and loss account means it is recorded in the profit and loss account. Profit and loss account on the basis of estimate. All right. So we can also call provisions as the charge against profit because it is recorded in the profit and loss account. All right. So this is therefore it is also called charge against profit in order to provide for any kind of liability or loss. Let me write it down as well. It is considered a charge against profit. Just a minute. Wait for 2 minutes. All right. So yeah, it is considered as a charge against profit. Why? Because it is recorded in the profit and loss account for the purpose of providing any liability, you can say, or any kind of loss. All right. So this is how we can define the provision, charge against profit. Now, if you need to give few example regarding the provision, you can write these as the examples. Like examples are number one, it could be we make the provision for depreciation, right? Provision for depreciation. Then we have, as I told you, provision for taxes. It could be, you can also make provision regarding the repairs, the provision for repairs. All right. And there could be other provisions as well. Apart from this, yeah, there could be provision for doubtful debtors as well. Provision for doubtful debt. All right. Done, everyone? All of you are still writing?
Done, sir.
Done, sir.
So if I need to explain the purpose, why do we make provisions? We can say that provision is basically prepared, it is created so as to meet any anticipated loss which has which has occurred, but the amount is not certain. Regarding, like, if we are sure that loss is going to be incurred, but we are not sure about the amount of loss. So we prepare ourselves by providing the provision. All right. And sometimes provisions are also made. Uh, how can I say that? When like for example, we have asset, like we have a machinery of 5 lakh, and as you know, machinery is a fixed asset, and the value of asset reduces over the period of time because of uses, wear and tear, affliction, and there are so many factors that will lead to the reduction in the value of machine. Right. So that is known as the depreciation. I'm sure everybody understands that. Depreciation is basically a reduction in the value of the machine. Like if we have bought a machine valuing 5 lakh, so like let's suppose the life of this machine is going to be, let's suppose, 5 years. So that means every year this machine will reduce by 1 lakh rupee. Since it's going to last for 5 years, so that means the value of the machine will decline by 1 lakh every year, right? So we are sure that after 5 years, this machine will be of no use. So what do we do? We make provision regarding the depreciation so that once the life of the machinery get over, we have sufficient amount of fund to to purchase the machinery again. Like for example, I mean to restore the machine. Uh, like let's suppose we made a provision of 1 lakh provision for depreciation. We made a provision for depreciation 1 lakh on annual basis. So for after 5 years, if we keep on transferring 1 lakh to the provision for depreciation, if we keep on transferring 1 lakh by the name of provision for depreciation, we have 5 lakh of amount. 5 lakh will be available, and using that amount, we will be able to purchase one more machine after 5 year period. Got it? So why do we prepare provision for depreciation so that we can easily be in a position to restore the machine once it get it get depreciated completely. We will have sufficient amount of fund using which we can purchase a new machine. So it is also, provisions are also made. Firstly, it is made to pay off any kind of obligation expense, and it is also prepared so as to maintain sufficient amount of fund using which we will be in a position to purchase new machinery, furniture, or any other asset. All right. So the purpose of creating the provision is to anticipate loss which has already occurred or which will incurred in future, but the amount of which is not cannot be ascertained with accuracy. And it is also prepared for the depreciation. If the value of the asset get depreciated, we will have sufficient amount of fund to restore that machine. And uh, yeah, so basically these are the purposes we make the provision for. All right, let me write down the purpose as well, because in exam you can be asked regarding the purpose of provision of purpose of preparing the provisions. So you can write this. these are the basic purpose of preparing provisions. Provisions are made with the purpose to meet an anticipated loss, right? And it is also made with the purpose to meet any depletion that is arising in the value of any asset. Okay. Then it is also prepared to pay off any liability which we are sure about that the particular liability that will arise in future. So we are preparing for that, and therefore we have prepared the provision. Okay. Now let's talk about reserves as well. What are reserves? And everyone, is this clear? Everybody till this point? Anybody having any doubt?
No, sir.
Done, sir.
Done. Let me read this for you one more time. See, until now we just discussed that provisions are what? Provisions are amount which is set aside in order to provide for any known liability, or you can also write loss, the amount for which cannot be determined with accuracy. It is a charge it is charged in profit and loss account. That means it is recorded in the profit and loss account. Instead of charge, you can also write down recorded in profit and loss account. Okay. On the basis of estimate only, it is considered a charge against profit, and the purpose of providing the liability or loss. And these are the few examples of provisions, and provisions are made with the following purposes. Okay, now let's move forward and talk about the results. Let me first write everything down. Reserves are also part of profit which is kept aside. Reserves are the amount set aside out of profit. But the difference between the provision and reserve is what? Provision are always made before calculating the profit. Alright, before calculating the net profit. And reserves are always calculated and set aside once we are done with the net calculation of net profit. So reserves are made out of net profit and provisions are made while calculating profits. So this is the basic difference between reserve and provisions, that one is prepared while preparing the profit and loss account, and reserves on the other hand are the amount which is kept aside out of profit. So how it is different from provision? Firstly it is different that in a way that provisions are made at the time of calculation of profit and reserves are made at the time of after the calculation of profit. All right, this is the first difference. Then the second difference could be that provisions are considered as the charges against profit, right? Profit provisions are treated as charge against profit. On the other hand, reserves are not considered as the charge against profit. Rather, this is treated as the appropriation of profit, or sometimes also called accumulated. It is known as the appropriation of property. All right. So let me first of all write this down. I'll explain you a little more about the reserves, but let's first write it. Reserves are what? Reserves are amount, just like the provisions are the amount set aside out of profit. And it is considered as an appropriation of profit. Unlike provisions, reserves are not made for the purpose of meeting some liability or depreciation or any kind of loss. All right. Or you can say for any kind of unknown contingencies that may or may that may arise in future. Let me write it. Reserves are not made for the purpose of meeting some known liability or depreciation in the value of assets. But reserves are actually made in order to meet any known or unknown contingencies that may arise in future. Okay, so see how reserves are different from the provisions. Provisions are always made for known liability. All right. But on the other hand, reserves are made for, it could be in relation to any contingency, whether known or unknown. If you are not sure about a particular event that may arise, which may lead to outflow of cash, for that kind of contingency, we make the reserve. So see, reserve, there is no, you can say there is no specific purpose of making reserve. There is no like the provisions are made, like provisions are for specific purpose, the provision for tax, provision for repair, provision for doubtful debt, provision for depreciation. All these are specific purpose related provisions. On the other hand, the reserves are reserves could be uh, for meeting out unknown contingencies and known contingency that may or may not arise in future. We are not sure whether the particular contingency will be arising in future. But for safety purpose, we allocate or set aside certain amount out of profit just to ensure that when such contingency is faced, we have sufficient amount of fund to resolve that contingency. We have sufficient amount of fund to face such contingencies. So therefore, the reserves are made. Few examples regarding the reserve could be following are few examples that we can consider. You must have heard of the journal reserve. It is a part of profit. All right. Then there is one more reserve, which is a reserve for expansion could be there, reserve for expansion. Yeah, so there are not much examples I have for the reserve. There is one more reserve I'm not able to recall. Yeah, reserve for increased cost of replacement. For increased cost of replacement. These are the example of the reserve. All right. And apart from this, yeah, we have one more reserve. You must have heard of it. Workman compensation reserve. Workman compensation reserve. And there could be investment fluctuation reserve as well. These are the examples of the reserves in the investment fluctuation reserve. Now, how it is different from provisions that these reserves are made for some contingency that may or may not arise. We are not sure about the contingency that will be arising in future. Like here, I have wrote an example. Workman compensation reserve. Workman compensation reserve is made to compensate the workers in case some mishappening arises with the employee or any workman. Like uh, in the area of in the working area, let's suppose there is some accident because of which one of the worker get injured. So in order to compensate those worker who got injured at the workplace, we make a reserve. All right. So that kind of reserve is called workman compensation reserve. Now there is no surety that such accident will arise in future. But just to prepare ourselves, just to make ourselves ready that if something happens, like if some contingency arises, we have sufficient amount of fund available to compensate such worker. We make the reserve on advance basis, which is called compensation, workman compensation reserve. So reserves are mostly made for the contingencies regarding which we are not sure. But provision is something. Provision is a known liability. We are sure that certain obligation, certain liability will arise in future. We are sure that loss will be arising in future. Only thing that we are not sure about is the amount of loss, amount of liability that we'll have to bear. Right. So for the known liability, we make the provision. For the unknown liability or not the liability, in fact, or the unknown contingencies is the appropriate term, I should say. So for any unknown contingency, we make the reserve. And these are few example of the reserve. All right, is that clear, everybody? Now, I hope this is clear, everyone.
Yes, sir.
Okay. So there can be 3-mark question that can be asked in examination regarding the difference between reserve and capital. Sorry, reserve and provision. We'll talk about the difference between the provision and reserve in the next session in little bit in detail. And also, there are two types of reserve. We'll also talk about the different type of reserve. Like we have the revenue reserve, we have the capital reserve. We'll also talk about that. And we will be able to finish this chapter in the next session. We have some other reserves as well, like the secret reserve is there. All right, so we will be covering 2-3 things in the next session regarding this chapter. Like first of all, I'll be discussing the difference between reserve and provision, which is very important question from examination point of view. Most very frequently asked question in exam. How do you differentiate between reserve and provision? So we'll discuss that. We'll also discuss the few different types of reserve as well, but like the secret, what is secret reserve, what is revenue and capital reserve. We'll talk about that. But for today's session, this is it. We won't be discussing anything else apart from this in today's class. So I hope everything that we discussed in today's session is